The stock market is a great place to put your money, but please go about it carefully. Hello there, welcome to another video. As always, any questions, drop a comment, check out my second channel, subscribe. Now, there's a famous saying in investing and life in general: get rich carefully. Now, this can apply to real estate, stocks, commodities, in life in general, at a job, whatever. But this is my take on what it means to get rich carefully on the stock market. So we're trying to stay safe, diversified, and get stable returns over a long period of time. So here we go. Now, first of all, whenever you have cash available, I think you should invest. So every time you get a paycheck, invest a little bit in the stock market. So be consistent. Don't try to time the market or save up a big sum of money before you invest. Just invest whenever you have cash available. This way, if you invest consistently, you'll also get consistent returns. And the money you do invest should be money you don't need for the foreseeable future. Not next week, not next year, actually not in the next 5 to 10 years, in my opinion. So this is money you can afford to lose, but another way of saying that is it's money you can afford not having, because money you invest is not money you have readily available. So keep some cash in the bank or whatever, a savings account, but what's left, invest it. Because holding money in cash is the last thing you want to do, because it's simply losing its value to inflation and it's not doing anything. Now, the money you do invest, if you want safe, stable returns over many years and stay diversified, go for index funds or blue chip stocks. Blue chip stocks means big companies, usually the biggest. Microsoft, Apple, Procter & Gamble, ExxonMobil, these sorts of companies. Index funds or index ETFs are diversified stock funds, representing a big part of the stock market. So it could be a US index fund, a global index fund, tech, industrials, financials, anything. So if you invest your money in an index fund, you are automatically greatly diversified, so you don't have to worry about picking different stocks. If you do pick blue chip companies, they're very safe. There's established companies, and the stock returns are usually quite stable, and most of them also pay a dividend. Speaking of dividend is something that is very important and you should actively seek out. As Kevin O'Leary from Shark Tank says, any investment which doesn't pay a dividend is a speculation, because you don't know if you're going to make any money from it or not. Now, take that with a grain of salt, because stocks usually go up, but dividend is a great way to make sure you get paid, and it almost makes up as much of the gains as the actual increase in stock price, believe it or not. So dividend is a way to smooth out your returns and make sure you get something from your investments. And the money you get from dividend, I would just put back into the stock market or some other investments. Now, when you've bought a stock or an index fund, never sell it, never trade it. Think long term, just keep it. The longer you keep it, the safer it is and the more gains you get. Trying to time the stock market or trade on a weekly or monthly basis statistically never works out. It's better to just pick great companies and index funds and just hold them for the long term, and let compounding growth and just the natural growth of the world economy and the stock market and your dividend, let that do the job for you. Thinking short term in a job, in a relationship, when exercising, doing a sport, losing weight, it rarely pays off. It almost never works out. So think long term. Don't worry about short term swings. It's really going to mess with your mental state, and it's going to take focus away from your family, your job, and your hobbies. So don't worry about what happens next week, next month, or next year. Just know that the money you have invested is money you don't need, and it can just stay there forever. You don't need it tomorrow, you don't need it next week, so why worry about it? It's not, don't think of it as your money. It's investments you want to keep your whole life, right? So you never want to actually sell them. And remember, you never take a loss before you sell an investment. And if you do all of this, you'll make a bunch of money on your investing, but you're also going to be able to sleep well and just go on with your life. Your investing portfolio is not the most important thing. It's not the end all be all of your life. So don't let it take control. Leave emotions out of it. Don't think about it. It's just numbers. It's just money. And just let compounding growth take care of the less. Your money grows faster than you think because it's compounding. And as Einstein said, exponential growth or compounding growth is the most powerful force in the universe because it's unstoppable. Because something grows faster and faster and faster and faster, and the curves just keep steepening. And as we know, it only takes 7.9 years to double your money at 10% a year. So, it just grows a lot faster than you think. So just let it do the job, stay diversified as well, and good luck with your investing. If you want to learn more, check out the rest of the channel, check my second channel, check out investingforall.net. Hope you're having a great Christmas season, and I'll see you in the next video.